Hello everyone, I'm just doing a little video today, just discussing two currencies, Forex trades I've got my eye on. I'm going to discuss how I got my bias, whether I'm going to longer and short it, where I come to that conclusion, and I'm also going to discuss the levels that I have my eye on to enter in the trades. So I just want to first start off by saying that I'm not a profitable trader, so this is just document my journey into learning and to becoming a profitable trader. So yes, this is not any trading advice at all. It's just a little bit about me and my journey. So anyway, let's get to it. I'm going to start off with the Canadian dollar. So I will actually be placing my trade, hopefully, if I reach my levels on the USD Canadian dollar. We'll come back to these charts in a moment, but yeah, what I do is I get my bias using the futures chart. So with the Canadian dollar here, this price action here is actually it is the Canadian dollar versus the US dollar here, but it's just like inverse. So if I'm long in the Canadian dollar on this, I'm actually shorten the US dollar, and then when you go onto the actual Forex chart, it's the other way around. So long on this chart, if you're longing, you're long in the US dollar, and if you shorten this chart, you actually shorten the Canadian dollar. So it's just inverse from the futures chart. So anyway, so let me just tell you how I'm getting my bias for longing the Canadian dollar. Well, the main reason being is if I go onto the US dollar futures chart, it's these two. This one here, the red one, squiggly line at the bottom, and the blue. Let me just explain what these are. This here is the retailers, like the amount of contracts open for the US dollar. So let me just draw a little thing here. That should already be there. I don't know why it's no longer there. It's been deleted. So so this is the retailers. So I've drawn this line here, this little box, because if you look here, as the retailers become bullish and reach roughly this level of contracts open, as you will see, the price will drop. So let me just get these lines on here. It's not perfectly to this as soon as it doesn't happen as soon as we reach this zone, but it does give us a little bit of a heads up on what it may happen. And it's just about timing, but this is just about getting bias. Yeah, it's not a timing tool, this is a bias tool. So yeah, as we can see here, I'm just going to close this one for now. I forget this blue one here for now. That's the actual commercials. But when it comes to the dollar right now, this is what the most important thing to me is, the retailers. So that's the likes of me and probably anybody who does happen to watch this video. We're retail traders, and like they say, 90% of retail traders lose money. So we want to be on the opposite side of what the retailers are doing. So let's get back to this. So as you can see, you can got another one here. So as you can see, once the price, the retailers reach roughly this level here, with the red line, we got a drop. Further along again, a few months down the line, as you can see, again we got a massive, huge drop. Again, if you get right into this zone here, we find ourselves with a big drop. Again, well, not so much there. This doesn't always work out perfectly. It just gives us an idea, a bit of bias. It works out here lovely on this one. Again, we got a lovely drop here. Now we're back into this zone again here. So what I'm thinking is we do a bit of a drop with the US dollar, which, as I explained before, is the actual opposite to the Canadian. So if they're going bearish on the US index futures, then that means we do think that the Canadian dollar will long. And as for a matter of fact, if we think that the dollar is going to drop, that means we're going to be long the euro, the pound, the Aussie dollar, the Canadian dollar, the JPY, the New Zealand dollar, and the Swizzy also. Yeah, they're all like sort of correlated. They will all usually travel in the same direction as each other, opposite for the US dollar. So anyway, let's get back to this. So I've just explained why. Right, yeah, so I'm bearish the US dollar, long the Canadian dollar. So that's the reason why. Right, so now that I've got my bias and I think that the Canadian dollar is gonna go long, I need to plot my entry points, my potential entry points now. Just forget the monthly chart here, top left hand corner. We don't really need to look at that. Right, the main one for now will be this daily chart. So I think a lot of traders, retail traders, with a Canadian dollar long bias, waiting to long it, will actually look at this zone here and be like, oh yeah, this is a really nice zone, and we'll look to plot their entry here. Now it might work out, but this to me is a very weak zone, and let me just explain why. So when I'm plotting my zone entry points, I'll always look to the left and then see if we've got any other previous reactions from that same area on the chart, and we do. So here's the last one, which was a nice reaction. Look, we got lots of very, very good reaction. You know, lots of follow through to the upside, really strong. But the issue in my eyes is that, you know, this is the latest, the last reaction, but we've got a reaction here and a reaction here. So each reaction, in my back testing experience and from what I've been taught, is that they get weaker and weaker, and it's more likely to actually break this zone and come downwards. So that to me is a weak zone. Now what I would do, I'm okay if there's just two previous similar zones, similar area on the chart, I can take that, my rules. So this would be great if there was just this zone here and this zone, not this. But once it gets to 3, that's it. I cannot, as my rules, take that trade. So I do think that there's quite a good chance, as this is a weaker zone now, of this coming through and breaking this. Now, yeah, I think that a lot of traders will be looking at that eye and that, and will actually long from here. And there's a good chance they're going to get caught out. So what I'm going to do is I have two options. I can take from this zone here, which is fresh, because as you can see, there's no prior upside movement on the chart previously. See here, we got a down movement, So this is fresh. Now the fresher the better. Now this, which, you know, with a bit of luck, will be a nice strong zone. We got an explosive candle up here. That's the first leg out. A little bit of a pause, sideways, and then bang, straight back out again. So to me, that's a very, very, well, potentially a good strong zone, which I would definitely be happy getting involved in. Now I have two options. I can actually take the trade here, or I can wait it out a little bit and take the trade here. Now personally, I'd be scared of missing out. I am a swing trader, so I'm not getting trade opportunities that often. And if I was to wait, if I was to, you know, forget about this and wait, be patient and wait for it to enter this zone here, I'd be waiting forever, you know. There's a decent chance, I believe, that the price can react and bounce straight out to this zone. So I won't be, what I will do is I will take this zone here, and if that fails, I will more than likely, as long as the COT data doesn't change dramatically, I will also enter here if this one fails. But this zone here, to me, it looks really good. And previously, when I first, you know, even up until recently, trading, I would have taken this all day. Yeah, so yeah, I do believe that this isn't the strongest, and hopefully I'm right about that, and the price will come into this zone. Now I've set me a little alert here, so what I do is basically wherever I am, I've got my laptop with me, and if it does, I've got an alert on my phone, on my watch. I just try and get onto my laptop as soon as I can, and then actually really refine me entry point and get and do it that way. Now what I will do is that if the price does come into this zone here, I'll do another video on me refining my entry point. And yeah, so anyway, that's the Canadian dollar. Now let's switch it to my other one I have my eye on, is the New Zealand dollar. Now I did say before that I do believe that the euro, all of these, forget the dollar, all the others here, they're all going to go up soon, just because the US dollars looking a little bit bearish due to the retailers being so bullish. But I've looked at all of these other currencies here, and the two charts with the zones that stand out to me are the Canadian dollar and the New Zealand dollar. So right, now let me just go through the COT quickly when it comes to the New Zealand dollar. Now when it comes to the New Zealand dollar, we got favourable COT data for both the retailers, which is the red on the left, and the commercials, which is on the right. Now the commercials are like known as thought of as the smartest money in the game. These are the people that, like, these really, they're the smartest. These aren't there following trends. This is like their business, the Canadian dollar. Yeah, so what you will find is they're the opposite. They're always at the opposite end of what the retailers are doing. Because the retailers are bad, they lose 90% of the time. Whereas these guys on the right, the commercials, these are, you know, you want to be following these if you can. Do what these guys do. So let me just plot some lines again on the chart. So now remember, this isn't an entry, a way to plot entries. It's just bias. They get a bias. Okay. Although you do get your bias, then it is tricky and it's hard plotting the right entry, find the good quality zone. And this isn't, like I said before, this isn't perfect by any stretch of the imagination. But you know, it does give us a little bit of help getting you know, getting our bias together. It does help quite a bit, and it's quite accurate. It is quite accurate. It's just not perfect. Now let's go to the New Zealand dollar on the left. Like this again, I've laid out a few zones. So again, look, once the price, once the retailers reach down roughly into this zone here, look what happens. The retailers become bearish, really bearish, and then the price just explodes upwards. Amazing. Again, here, look, retailers come into this zone. Alright, it takes a little bit of time, but eventually we get the explosive move upwards. Now on the opposite side of this fence, or opposite side, whatever, not the fence, you have here, look, once the retailers become very bullish, with the price snaps back down again into the zone being bearish, rips back up, bullish, down, bearish. Now to the bearish, so I am thinking my bias is with the retailers being so bearish, the price is going to rip upwards, but I need the price to come down first. I need the dollar to go up. Now just quickly on the commercials here again, look, the commercials are bullish. What do we have? Move upwards. The commercials are bearish. What do we have? Heavy drop. Bullish again, move upwards. Like the price, the commercials come down around the mean of this little zone we have here. Comes back up to bullish. Now I'm hoping we're going to get the move down. So, move upwards, I should say. So now let's plot my entry point on the New Zealand dollar. Now, with the New Zealand dollar, it's a little bit more tricky. So what I'm doing is I have two zones in mind. I have this is the king here. Right, just forget that little thing there for a moment. This is the king right here. The reason being is, if you look here, we do have a reaction. So there's one reaction, okay? So this zone isn't fresh, we know that. We have another reaction. Yeah, we got another reaction here. That's reaction number 2. So, sorry, and you know what? No, scrap this one. I wouldn't really count that as reaction. It's a little bit higher. Although I did say before my rules, after 3 reactions, that's the end, didn't I? I did say that. So yeah, maybe this isn't the king. Tricky. I know for a fact this is the best zone of them all, but let's be honest, the price is never going to reach there. So anyway, I've got my eye on 2 zones. I'm not sure whether I'll count that here. But anyway, I did have my eye on this. You know, the price falls in, drop, forms a base, and then we have the nice rally upwards. One thing we have to be careful about here is this gap. There is a gap. See this here? So what you'll find is on the gap, when there's gaps on the chart, especially with currencies, and they do tend to get filled. So I do feel like the price, there's a good chance that it's going to come down here and knock out this gap, fill these orders, and then resume whatever it wants to do. So yeah, so this is the first zone I've got my eye on. And this one, I'm not too sure. Now, I mean, let me explain why. Look, it's pretty messy here. Now, these zones are better when you don't have all this crap, all this garbage next to it. But what I'm thinking is, if I switch to like an hourly, what I was thinking is what if, I've marked it out here, what if I get involved here? So I'm thinking this could be my zone. It's fresh. On the 4-hour chart, that's fresh. Because as you can see here, these is all downward movement. Now, if I was to look at this zone here, if I was to look at this, we have all of this garbage, poo, to the left, which it's not very clean, is it? But this here, it's fresh. It's extremely fresh. Yeah, so I do have an alert set. I haven't made my mind up totally whether I get stuck in there. But I think I might. So yeah, so let me just explain this. So we have the rally, base, and then we have a drop in price. And then from here you would say a drop is my base, and then we have a big, lovely rally upwards. So yeah, so this is decent. It's decent. The only thing that isn't, the main thing that's making me reluctant here is when you go up to the daily chart, like the big brother. This isn't a zone. See, that's not a zone. Now, if we had a zone here on the daily, and then we drill down and we had such a zone on the 4 hour, 6 hour, 8 hour, I'd be in it all day. Happily be over the moon taking it, but it's this bit here. We have no zone on the daily chart, as you can see. But yeah, so now that I've plotted my bias, I have an eye on some zones. What I do is I'm trading prop challenges, CFDs. So I'm not actually trading futures. So what I do is got my bias, got my zones. So then I switch to the actual Forex charts, and I will just try and find. I'll just try and the charts can differ slightly. In some cases, they'll be the opposite way around, like I explained earlier, and in other cases, they're just slightly different layout and stuff, so it can be a little bit tricky sometimes. Yeah, see, as you can see here, look on the 4 hour, the currency chart, the Forex chart. See the zone, this zone, it's a little bit different. Let me just try and show you quick. Slightly different. But yeah. So I get me bias on the futures. Then what I'll do is I'll go over to the Forex charts. I'll refine my zones, plot my entry point, and then that's how I get place my trade, get my bias. So listen, if this is the end of the video. I'm sorry I've waffled on a little bit, and I know I'm not very articulate. I had a lot of stuttering and stuff, but I'm hoping I do get a little bit better doing this. You got to remember, this is all new to me. But yeah, listen, if anybody watching this, if you could just do a little like and a follow, it would be a massive help. And I don't know, if you want to follow me and see how I actually plotted trades in future, I don't know. So yeah, that's that. Catch you later in a bit. Bye.